Hello and welcome to Market Fatafat with me, Ankita Saxena, and with me is my co-anchor Vinny Motiwala. Vinny, so markets are seeing the sell-off come in from yesterday. The selling continues, and at one point Nifty was almost 100 points off the day's gains. Tell us how the market is shaping up now.
Absolutely. Look at the Nifty as of now. Considerably now it's below the 19,600 levels as well, around those levels. But today we've seen just red coming in on the Nifty as well. Just tried to make a comeback during the early morning trade, but didn't manage that as well. And we're seeing that the Nifty is trading in the red. Similarly for the Sensex as well, trading in the red as well, and seeing a decline of almost as of now 0.4% in trade as well. Let's put up the broader markets because that's where all the action is happening, and Nifty mid cap as well as the Nifty small cap both trading in the green as well. Look at the Nifty mid cap, it's up almost 0.3% in trade, while Nifty small cap also trading with gains of almost 0.1% in trade. Yes, it was near those red levels, but yes, managed to come back as of now, and holding on to some bit of a gain is the Nifty small cap as well. Looking sector wise, Nifty Realty among the top sectoral gainers. We have Nifty Energy 2 trading with strong gains of more than 1%, and Nifty Media 2 among the top sectoral gainers. Now, what is not doing well today in the markets is the banking space. Nifty Bank, that's down and out in trade, almost 0.7% in trade, and Nifty IT 2 down again in trade, more than 1% of decline coming in on the Nifty IT index as well. So let's keep an eye out on Nifty Bank and IT because those are the top laggards coming in terms of the sectoral indices as well. Top gainers stock-wise, we have Intellect Design, Indiabulls Housing, Prestige Estate, Ajanta Pharma, and Godfrey Phillips among the Nifty 500, which are buzzing in trade and seeing strong gains over there. While among the top losers of the Nifty 500, we have JK Lakshmi Cement, Sona Comstar, Blue Dart, as well as Dr. Lal Pathlab, which are individual losers in the Nifty 500 as well. But which are these other stocks that are buzzing in trade either on the back of news flows or on the back of technicals? And on the technicals, today we are joined by Aamar, while from the research team we have Harsh as well as Lisa joining in with us. So very good afternoon to all three of y'all. And as always, I'm going to be starting with the first stock that is in focus. Let's talk about Trident and why Trident is in focus. When you look at the shares of Trident, they slumped as much as 3% today after we saw the numbers that they reported. And when you look at it in terms of the numbers that have come in for the company, they reported a 27% drop in the net profits of the company on a year-on-year basis. We're seeing the total revenues of the company also falling by around 11% to 12% as well, coming in at 1,478 crores versus the same period last year. Even in terms of the EBITDA, that's fallen by around 7.5 to 8% as well. So clear weakness that we've seen coming in from Trident. Trident major business comes in from textile components, which accounts to around 80%, 82% of the total revenue. Now that is something that we're keeping an eye on because that also fell almost 10% as well. So yes, the weakness was seen in Trident's numbers, clear fall that was seen on the top line as well as the bottom line as well, and that is why we're seeing pressure coming in on the stock as well, down almost 3% in trade as of now.
Well, that's correct, Vinny. The other stock that has been making news since yesterday is, well, Laurus Labs, because Laurus Labs Q1 numbers came out and the numbers were rather weak set of numbers, and the stock is down almost, more than 2.5%, it's almost down 3% in trade now. And if you look at the numbers, there was a decline of almost 23% in their revenues on a year-on-year basis. The profits were down 90%, an EBITDA decline of 63%, and the margins also declined 1,540 basis points on a year-on-year basis. And on the back of that, Jefferies came out with a note today on Laurus Labs, and they have maintained an underperformance with a target price of 250 rupees per share. And according to them, Laurus Labs has missed the estimates, in the fourth consecutive quarter on, the margin front, and the EBITDA margins are at a multi-quarter low of 14% this quarter. Also, they see a lower offtake in the ARV formulations, transitory shipments impact in the ARV APIs. Also, the CDMO performance has been weak, and Laurus may not have products to fill the void left by the Paxlovid. And on the back of that, this stock is going to be in focus in trade today.
Absolutely, surely keeping an eye out on Laurus Labs. But let's move on and talk about the first stock on the technicals. And Aamar, good afternoon. And the first stock you've picked out for us is Torrent Power. It's surely powered up in trade today, and not just today. When you look at it in the last 6 months also, it's moved up from those 430 levels, currently trading at 660 levels. What is the view on Torrent Power now? How much more upside? 50% is already what you've seen in the last 6 months.
Yeah, very good afternoon. So what we are seeing in Torrent Pharma is that The intermediate term trend that is on the weekly charts, the stock continues to be extremely strong. On the long term charts now, there's some very positive signs, and the way the stock has been moving, and also what we've seen over the last couple of weeks. So somewhere around the first week of July, we did see some really heavy volumes in the stock, and the stock has breached those levels of 630, 640, which was acting as a zone of resistance, and it's currently trading close to 670 odd levels. So technically, this is one stock which has a potential to rally towards 720, 730 levels in the short term. So this is one stock one can definitely look at. Even on the long-term charts, when I'm talking about that, that's the quarterly charts. It continues to be very strong. So this is definitely a stock which one can look at buying on dips. It has now got a very strong base around the 600, 620 short-term level.
All right, moving on to the next stock that is in focus, and that is BEL, that has reported some strong set of numbers, and the stock has been, has been giving returns of almost 45% in the last 6 months. Lisa, tell us what is the report card looking like?
Well, yes, Bharat Electronics, they reported a strong set of numbers. It is a strong beat to the consensus. The net profit that came in at around 47% growth was reported, and this is on the back of strong earnings as well as strong operating performance. The revenue was up 12.5%, while the EBITDA that grew at around 28% on year-on-year basis, which saw an expansion in the margin at around 19% versus 16.6% on year-on-year basis. Talking about the order backlog, that was also strong. It was up around 18% and stood at 65,400 crore, and the order inflow also was strong at around 10% growth. Well, after the con call, the stock has seen an uptrend. The con call was at around 10 o'clock, which ended at 11, and we see an uptrend coming in from there because guidance that remains unchanged. The revenue guidance came at around 17% for the whole year. Even the orders, that also is the capex, that is at 700 to 800 crore, which is maintained for FY24. And the management also highlighted that the QRSAM orders that will be expected in FY25, while the MRSAM order, which is the missiles order, that is in discussion stage. So that's on Bharat Electronics. It's trending up around 2% as we speak.
Okay, that is BEL for y'all. But let's move on and talk about Macrotech developers. And Harsh, this one reported its numbers. When you look at it in the early morning trade, it had seen a fall, and now it's seen a recovery. So how are the numbers looking like? We also did have some management commentary coming in. If you could tell us more about that as well.
Yes, absolutely. So, decent to good set from Macrotech. What we're seeing is revenue was up 40% year over year. You're seeing EBITDA also, in fact, slightly lower on the EBITDA front, as well as when we're seeing margins, though, they've gone up from 17.4% to 20.4%. So we've seen a 300 basis point uptick when it comes to margins, and profit is in fact down 34% year on year. So what you're therefore seeing is not much on the P&L side, but more importantly with regard to pre-sales. You are seeing pre-sales at the best ever. In fact, reported Q1 pre-sales came in at 3,350 crore, which is up 17% year over year. And it's largely driven by a 27% growth in volumes, while realizations have declined 8% year on year. So have to keep an eye out on realizations going forward. And completions and launches also drove that pre-sales number. In fact, launches were much better than what most were penciling in. They've penciled in a launch pipeline of around 17,500 crore for FY24, but it's come in already at 12,000 crore in Q1 itself. So that's a big positive coming through, which is aiding Macrotech. So good strong commentary as well coming through.
Right, we'll move on to the next counter then. Aamar, REC is the next counter in focus today. It has already given a gain of, 65% in the last 6 months. Tell us what is driving the stock?
I would say that if you look at the stock has been in a secular bull trend, and also the stock is trading at its all-time highs. So clearly that shows that there is a lot of bullish momentum. And also, if you look at the long-term charts, the monthly charts, or the intermediate-term trend, the weekly charts, there's no decline in momentum. So what's happening is that the stock did consolidate in the first week of July, and then close to 165, 170 odd level. So that was a zone of resistance. But again, if we look back, So somewhere around 24th July and then again 27th July, we've seen some huge volumes there, and the volumes have been sustained by a breakout. So the stock, as long as the stock sustains above 165, 170 odd levels, the stock has continues to be in an upward momentum. But yeah, one of the technical indicators clearly is pointing that the stock seems to be overheated. So that means that those who are long, they should definitely look at booking some profits, and those who want to hold, they should have a stop loss below the 160 zone, because that's going to act as a very strong and crucial support in the short term.
Absolutely. Surely keeping an eye out on that one and the levels over there as well. But let's move on and talk about Motilal Oswal Financial Services. Yes, they reported their numbers and a lot of announcements that's come in with the numbers as well. So firstly, numbers, strong set of numbers was reported by the company. Higher fees and commission income is something that supported the growth. The numbers were also aided by the 334 crore rupees inflow for fair value adjustment of assets as well. And the asset under management of the company, also business overall AUM, was at 1.25 trillion mark as well, rupees trillion mark as well. So yes, keeping an eye out on that. But the other announcement that came in, and we saw a sharp spike up coming in Motilal Oswal stock, as much as more than 5 to 6% uptick, more than that as well, was mainly because they said that they will be announcing in terms of a restructuring and internal restructuring of their businesses is what they were looking at as well. And that is what is in terms of the reason that we saw that there was a sharp spike up coming in the stock as well. Other than that, what announcement also came in was later on during the day is that Motilal Oswal as well as Ramdev Agarwal will be donating 5% each, and so overall to donate around 10% stake for a charitable purpose for over a period of the next 10 years, or preferably earlier as well. So that is also an announcement that has come in. Let's keep an eye out on Motilal Oswal. Today it's buzzing in trade on the back of a couple of news flows that have come in, numbers, what they're talking about in terms of donating some part of their stake, as well as internal restructuring as well. So keeping an eye out on all these.
Right, moving on then, the next counter is in focus is GMR Infra. Amar, tell us what is your take on the counter? We have already seen an up move of 35%. Do you see more upside there? What is your take?
I would say if you look at GMR Airport Infra, we've seen the stock being significantly beaten down, and then the stock has bounced back from 20 odd levels, currently around 50. So clearly, what we are seeing is that the stock continues to be strong on the medium-term charts, the long-term charts, and also there has been a breakout because the stock earlier was unable to breach the 45, 47 zone. So now the stock is trading above that level, and also what we need to remember is that the stock is trading at multi-year highs. So when the stock, whenever a stock trades at multi-year high, that means there has been some structural, major fundamental changes in the company, which is really leading to this move. So the stock has an upside potential. The stock could rally towards 58, 60 levels. However, very crucial support for the stock is seen around the 48 and 47 zone, which I mentioned.
All right, moving on then. The next counter is for Westlife Food World, which is up almost 5% in trade today. Now a strong set of numbers coming in there. Now there was strong performance, a sales growth of almost 14% on a year-on-year basis, 9% year-on-year store additions, and the gross margin also improved by around 230 basis points on a year-on-year basis. That was led by stable input cost, basket cost optimization, and a price hike that was taken on earlier. Now the EBITDA also grew 19% on a year-on-year basis, and according to the management, the company maintains its guidance of achieving a revenue of 4,000 to 4,500 crores by FY27, driven by single-digit SSSG and 580 to 630 total store counts. Now, also on the back of that, the Motilal Oswal has maintained a neutral stance on them, and they have set a target price of 820 rupees per share for the counter, and that is on the back of that, the counter is going to be in focus in trade today.
Okay, surely keeping an eye out on Westlife Food World. But let's move on and talk about a stock on the technical front, and that is Engineers India. And Amar, when you look at it on the charts, what is it that you are seeing? 82% return in the last 6 months. That's not a small jump up that we've already seen. And now on at 151, would you still say a buy, or is it time to actually book profits, or maybe we could see some consolidation here now?
Yeah, I would say that the stock continues to be extremely strong on the chart. So So I would say that those who are long, they can definitely look at booking some profits. However, the stock is still far away from its all-time highs, which is close to the 200 mark. So that's one level where the stock could reach in the medium term. So this is a stock which is very strong on the long-term charts, the monthly or the weekly charts. So one can look at definitely holding it from a long-term perspective. Yeah, part profit can be booked at. The stock now has got very strong support coming around the 120, 130 zone.
Okay, that is Engineers India. Keep an eye out on those levels over there. But, let's pull up the charts for Ujjivan Small Finance Bank. They too reported their numbers. And now we're joined by the MD and CEO of the company, Ittira Davis, who is joining us to talk more about what the numbers are looking like and what we should be expecting. A very good afternoon. And, first let's just talk about what the numbers are in terms of your costs of funds and yields that have actually risen, and they have been aiding the margins of the company. So have the cost of funds peaked out now, and would you say that, should your NIMs, actually, that net interest margin, be around that 9 to 9.5% for FY24, sir?
Yeah, I think, that's a very good question, and that's at the center of all the business. So let me just go focus on NIM. Our NIM was 9.2 on this quarter, and we are expecting it to average for the full year at about 9%. Because what has happened is that, we had anticipated a small decline in the interest rates in the second half of the year. That now is looking unlikely, and the current interest rate scenario is expected to play out much longer during this financial year, possibly for the whole financial year as we see it today. So the cost of funds is going to be slightly higher than where it is today. The NIM for the full year is going to be about 9%. But having said that, there is some increase in the yields which came from the higher interest rates on the microbanking portfolio. That is yet to play out fully because that was done in two tranches. The first tranche in September of last year, and the second tranche, both 0.5%, in March this year. So and that applies only on the new portfolio. So as the old portfolio runs up, the new portfolio will have a slightly higher interest rate, and that benefit will come through during the rest of this year as well. So net, we are looking at a 9% net interest margin.
Right, sir. Also, this is the first time in a long time when you have seen your CASA book contract sequentially. Is it competition? Can we attribute this to competition? Is it a shift to term deposits? And what can we expect going forward?
Yeah, you're right. The contraction is something that we are working on. It's an industry phenomenon. If you look at all the other banks, most of them have seen contraction in CASA during this quarter. And that is, as you rightly said, it's a movement to term deposits because a lot of people are of the opinion today that the interest rates have peaked, or at least at the higher level, and there's not much more that they can get by higher interest rates. So the movement is a lot from SA into term deposits, locking in the interest rates that they can get for whatever period that they can get this higher interest rates. And then some of them, for their short-term needs, are also looking at overdraft against these fixed deposits. So that is a new phenomenon that we are seeing. People locking in the term loans and seeking short-term liquidity wherever necessary through overdrafts.
Right, Mr. Davis. Also, just one thing is that, your number of liability customers, that has actually gone down sequentially when you compare on a quarter-on-quarter basis. So are there any concerns on that front?
Yeah, it's a simple explanation. Part of it, at least, is that we did some housekeeping and some of the inactive accounts and things like that have been all tidied up. But having said that, part of the movement into term deposits is possibly some of the people moved out from us to other banks. But it is something that we are addressing, and it is something that we are confident that in the second and third quarter the growth in the number of customers will be back to where it was before, as far as the deposits are concerned. On the loan side, there's been no problem. Our loan customer base still continues to grow.
Right. So, sir, your ROA has been greater than 3.5% for this fourth straight quarter. As the cost efficiencies play out, would it be right to say that it will rise further?
No, our ROAs have been very good, and I think it has played out from all sides. One is, of course, the credit recoveries have played a significant role. Those recoveries will sort of decline a little bit as we go forward, because some of the recoveries are from loans which went bad a long time ago, and through a passage of time, that becomes more difficult to recover. So that unusual situation which we had for a part of the last financial year will slowly disappear later into this year. We are still seeing good recoveries, but less than before. And I think as we move out, it is other efficiencies which you rightly pointed out, the cost factors and other things, which will help to, offset the credit recoveries. So all in all, I think, where we see ourselves as right now on the ROAs is where we will go. It'll start coming down a little bit, but in terms of the industry, our ROAs will be right on top.
Right, and lastly, just tell us, what is that update and where are we on the merger front now?
Yeah, the merger is right now with the NCLT. The NCLT has given an early indication at the end of June. We are waiting for the formal order. Once that comes in, we then have to have whatever the meetings and other things which are required. So we are hoping that it will be completed during this financial year. And if everything goes according to plan, hopefully during the third quarter. Otherwise, it will spill into the fourth quarter. But we are hopeful that during this financial year, it will be completed.
All right, sir. Thank you so much for joining us today. And with that, it's time to slip in a short break. Don't go anywhere. After the break, we get you more stocks.